Hello everybody, thank you for joining us for this week's ICE commentary on the equity markets and looking here at the Russell 2000. You're speaking with Nick McDonald. I want to start with a weekly chart here, and I want to look at firstly the Russell in isolation, completely irrelevant of what other equity markets are looking like. And here we're starting to look bearish, so we got a very bearish candle last week. This is last week's candle, so this is the early part of this week's candle as I speak. This is last week's candle, got a very bearish close out of that range. We did have a really good rally, and we pushed right up, almost back to that 700 upper region. We came right back down again and closed the week very bearish and had a good close down outside that level. Any break this week down through the lows of last week, which is not too far away at all from the current price action, any breakdown through there is going to be looking very bearish and looking for a move down towards 600. There's a weekly chart. If we come and look at this on the monthly chart as well, while I've still maintained this is in an uptrend, it's starting to get towards the the lower region of where this is not going to be looking like much of an uptrend if it can just break down a little bit lower through these levels. Now that we've got 600 down there, but if we get down towards 600, while still technically we'll be in an uptrend, it's when an uptrend pulls back that far, it's starting to look like show the potential for more of a change of trend than anything else. So this is still looking in isolation at the Russell only. Coming to the daily chart on the Russell here, really what we need to see for a real confirmation of any move lower is we need to see a breakdown through, obviously we had last week's low first and foremost, which is only these lows here, which is very close, but then we've still got another couple of touches there to get down through. One thing that also makes me bearish here on the daily chart is that what we had back here, if we just come back to this first time we came into this this part of the range, we actually came and made a higher low between here and here, then we made a higher high, and that's why I was bullish back at that point, thought the market would move higher. It didn't, it went back into a period of no trend where we had no clear series of highs and lows. What happened here though, and we're still in a period of no trend, we made a lower low down here. Let me just mark these in. So we made a lower low than the previous low. What we've now done now is we've moved into a downtrend simply because we've now made a lower high as well. So we've got a lower low followed by a lower high. The probability is therefore lower low, likely to break that point. If we do break that point, we'll have also broken before then last week's low, which is only these the lows of these candles here. In which case, we'll be looking like coming down and testing 600. So looking purely at the Russell, the small caps are actually the most bearish of all the equity markets in the US right now. We're going to look at the other ones very quickly. Small caps look the most bearish, and it looks like we should come down and test 600. I will be expecting the market to find considerable support down there, unless there's been any major news catalyst between now and then to push it through. Coming in and just having a look at some of the other equity markets. Let's have a look at the Dow. Notice has not pulled back anywhere near as much. So remember when I said I was looking at the Russell in isolation? Well, these other markets haven't pulled back anywhere near as far. This is only a 61.8% pullback, really healthy pullback still. On the Russell, we had a much deeper pullback, well down around the 78.6 and a little bit beyond. But the 61.8% Fibonacci pullback is still quite a healthy pullback, and it still looks reasonable and still in a decent uptrend, just having had a good pullback into that sensible range. So bear in mind, any pullback on any time frame, this just happens to be a monthly pullback. So a monthly chart pullback, that feels big because we've had 1, 2, 3, 4, 5 really good down months. However, when you put this into perspective, that could have been a 10-minute chart or a 1-hour chart or a 1-day chart, and these kind of pullbacks, that scale of pullback, i.e. 61.8%, is quite normal. So it's all still quite reasonable there, although obviously there is still room to move further. It doesn't look anywhere near as bearish either across the daily and weekly charts. Let's just come and have a little, it's still ranging though, it doesn't look as bearish as the Russell, it's just still in this range. Come and have a look at the S&P, and this does look quite bearish. It's very similar to the Russell, but it does look bearish here with a very bearish candle, and a breakdown through that low would be bearish. But still, like the Dow, when we come and have a look at this on a monthly chart, it's just in that kind of sensible pullback zone. It's a little bit beyond 61.8%, so a little bit more bearish than the Dow, but not as bearish as the Russell quite yet. You can also take that view, though, that actually that could mean that these just have further to fall. The Russell could be the one leading the markets lower right now. Come and have a quick look at the Nasdaq as well. This still remains the most bullish of the indices, or certainly the one showing the most strength. I don't know if bullish is the right word, but it's certainly the one which is the stronger. And you'll see here still this has only managed to pull back just to a 50% pullback, and it's still above that level. So as we speak right now, we're only around a 38% pullback of its monthly chart trend. So it's not all that bearish at all. And typically the Russell and the Nasdaq are the most closely correlated of these index markets. So again, we could be looking at this as, okay, well the Nasdaq is bullish and likely to pull the Russell higher. Equally, we could look at it and say, well, the Russell is all the way down here. That means that the Nasdaq has room to move that kind of level as well. So That's why I said, first of all, my view was looking at the Russell in isolation, because in isolation the Russell looks bearish, and it looks by far the most bearish of all of those index markets. If I was not looking at any other chart, my view would certainly be that we're going to get down and we're going to test 600 on the Russell this week, if we can just break a little bit lower in the early part of this week and break through last week's lows. So if we do that, and my view is that we'll get down there. However, there is a slight exception here, and that is that the other equity markets are still looking a little bit more bullish. They don't look anywhere near as bearish as the Russell, and if they start to turn around, the Russell will undoubtedly follow suit. I can't see, though, any sign on them of a specific point where they are going to be bullish. They just look more bullish than the Russell. So really what I'm saying here is I am bearish. I'm bearish down towards 600. I'm just not massively bearish. It's not got massive support from the other equity markets. It's not an entire equity market down move from what I can see. However, they are all likely to move in the same direction. It's just not looking as bearish as it would be if they all had clear indications to the downside. So my view here is in the short term bearish. I think we'll get down towards 600 on the Russell. I will be keeping a close eye on the other markets, though, and any turnaround there which we might see before the Russell, which might change my view on that. And I'll also be keeping a very close eye on the new situation, the Europe situation, knowing that getting better could actually improve these markets and see a rally quite quickly. Also getting worse could see quite a quick fall, and we're certainly in an erratic and volatile market right now. We can see that here. This is not good volatility, by the way. Good volatility is fast falls or fast rises, but a obvious direction. This is much harder to trade volatility when we've got really big moves, but there's not really any clear direction. Is what we've had lately. What I'm looking for this week, however, though, is if we can break down through that low, I'm looking for some more clear direction on the move down to 600, and that's the direction I think we are heading. So I hope that helps everybody. I hope it makes sense, and have a great week's trading, and I'll look forward to speaking to you on next week's update.